Back in the action once again. It's about that time of day again here, folks. Tuesday evening, November 19th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, great to have you with me here this evening because I help traders find high-quality setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. My job tonight is to help you guys and gals find the best levels of support and resistance, the best entries and exit setups for tomorrow, and most importantly, my job tonight is to make sure you guys are ready to avoid all those easy, common traps that will take your money back in tomorrow. That's Wednesday's trading session. And we have a lot to talk about on tonight's video. We'll grab some charts tonight. We'll look at the calendar tonight. We get some oil, some S&P, some Nasdaq, some gold. We got some big news on the horizon tomorrow. I'm going to start off first with the black gold, the Texas tea, those crude oil futures. I'll tell you, oil got clobbered today, right? We came in this morning, had a bunch of news overnight that sent the oil prices tumbling lower. And I'll tell you, anytime I see what I saw today on oil, I know exactly what I'm looking for the following day. Let's not waste any valuable time. Always great to have with us. Let's grab that oil chart and let's get this party rolling here. Now, unless you were living under a rock today, unless you hadn't opened up your charts all day long, today was pretty much a bear day on oil all day long. And of course, this all happened overnight when Russia came out overnight and said they would not be participating in the coordinated production cut from the OPEC countries, right? They're trying to spur the prices to keep rising on crude oil. They're trying to cut production, and Russia came out this morning and said, we're not doing that. We're not going to cut our production. And sure enough, what happened was, right, the market collapsed going lower. Now, whenever I see a market go 1, 2, 3, 4 legs down without really any pullbacks, usually the following day is going to be a range. And we'll call this a spike in range. Now, spike in ranges are really, really interesting patterns because they make my job pretty easy, right? I want to be a seller. I want to sell up around resistance. I got a bunch of resistance levels I've found here. So I want to be a seller, and we'll talk about some specific entry patterns to be a seller in tonight's video. But at the same time, though, as this market starts to go sideways here, we start to find ways to start to pick a bottom. Now, if you've been watching oil as long as I have, you know that whenever OPEC talks, right? Whenever we hear from OPEC, it usually stirs things up for about 24 hours to 36 hours, 48 hours, and then we usually go right back to where we came from. So there is potential here. We may get a rally going back higher here, and I've got a couple patterns I'm watching for here to pick that bottom here on the gold for tomorrow. So I got you covered both the sell side and the buy side. Most importantly, though, I'm going to keep you out of trouble on that oil for tomorrow. So make sure you stay tuned. If you're an oil trader like I am, stay tuned for more in tonight's video. Over on the S&P, S&P is kind of the opposite of the oil market. S&P, of course, was bullish going into today's trading session. And as I kind of mentioned last night, I had a gut feeling that we'd probably end up going sideways up here. And that's exactly what's happening, right? It's a bull market. It's into a range. It's kind of the opposite of what we have on oil. Oil is a bear market down. We anticipate a range. It does look like, though, on the S&P, we have that range now pretty well defined. Now, anytime I have a range-bound market, the plan is pretty simple. I want to buy low, I want to sell high, and I want to avoid the middle. Okay, pretty simple plan. There's one big clue on this chart, and that is this strong move down right there. Because anytime we see a strong move in one direction, we oftentimes see another symmetrical leg. So I've really got my eyes on this area down around that 31.05. I've got this expanding trend line coming down. I'd love to be a buyer down around that measured move. The problem is if we get all the way down to 3105, this is going to be a very, very deep pullback. The market will be very bearish when it pulls back that far. And because of that, I've got to resort to a much more conservative buy pattern. And we'll talk about tonight on the video. I'm looking for a shallow pullback and we'll buy off those lows. We really get that run lower. I've got two scenarios I'm getting prepped up here for tomorrow. And obviously, we continue to see these new all-time highs right now. I will also look for the market going up so I can sell it back down again. Every time it pokes its head higher, we seem to get that collapse back down. So we'll talk about how to short the highs right now. We'll talk about how to buy off the lows. And we'll talk about everything in between. Definitely make sure you stay tuned here for the S&P. And then obviously the Nasdaq. Nasdaq is very similar to the S&P right now as well. Nasdaq makes that big run higher. And anytime you see a big run up like that, you always know they're trying to get back to retest the high, right? And they failed. They failed miserably to retest that high. Every time we're making all-time highs right now, they're backing off those all-time highs. And just as we talked about in last night's video, buyers continue to come in and defend these pullbacks. And that's exactly what I would expect more of tomorrow. It's a bull market into a range, right? Get lower highs, higher lows, triangles. What does a triangle tell me? Triangles are really powerful ranges. They don't just tell me buy low and sell high. They make it very specific about where to buy low and where to sell high. And in tonight's video, we'll talk about my favorite patterns to buy low. We'll talk about my favorite patterns to sell high. We'll stay out of the middle. And obviously, we'll talk about breakouts, right? If we get those breakouts, either bullish or bearish, you definitely want to stay tuned for more on that Nasdaq tonight. And then, of course, over on the gold, the yellow metal, well, buyers came in and bought the dip here. Big, strong up in yesterday. We're anticipating a pullback, but look what happened. They got back to retest the high, but what do we see? We see rejection at those highs. We can obviously see the buyers have this right now, right? I don't think anybody thinks this is a bear market at this point. We know we're bullish. The problem is this is the last place I want to be buying. We see a strong run up, a nice deep pullback, right? The bears come in, they try and they fail, and they run back up to retest the high. But the problem is we're right back up to that high right now, and we're not seeing any follow through that high. So in these types of situations, these oftentimes lead into a range scenario. You'll notice I found that range, right? And if we assume it's a range, I want to buy underneath the range. Now you'll notice I've got two buy zones here, 1 and 2. I'm going to use different patterns for the first one than the second one. So make sure you stay tuned tonight, right? We'll talk about these specific entry patterns to watch on the gold. And then as we go higher, right? Can I buy that breakout? Can I buy as we go higher? I mean, after all, we get a good measured move waiting over here. Yes, you can. You can definitely buy as we're going higher, but I've got two patterns to watch for as we make that breakout because I don't want to get caught buying the breakout. I want to wait for the breakout and look for these two very important patterns. I'm going to talk about all the setups to watch for on gold. Most importantly, we'll also talk about what to avoid on the yellow metal for tomorrow. So boy, we are locked and loaded here tonight. We get the gold, the Nasdaq, the S&P, and of course the crude oil. Always appreciate you guys tuning in here every evening on this video newsletter. Before we jump into the video though tonight, as always, I want to remind you, make sure you join the mailing list. Make sure you join our mailing list. That way you'll get an email from me every time our nightly newsletter goes live. The easiest way to make sure you never miss a great video on our YouTube channel is to join that mailing list. And it's easy. All I need is your name, your email address. Hit that subscribe now button, and don't forget, when you subscribe to join the mailing list, your job isn't over yet. You still have to go in, check your email inbox, because I'm going to send you a welcome email. Inside that welcome email is a verification link and a bunch of great free resources for you so you and I can get the most out of working together every evening on this video. So don't delay. Join the mailing list. then check your email inbox. I'm going to send you that welcome email. And a heads up, guys, sometimes that welcome email gets stuck in your spam filter. So if you don't see it in the email inbox, check that spam folder and make sure you whitelist us if it's hanging out in the spam folder. How about some questions here tonight? You know, I always love answering those questions down the comment section below. If you have any questions, any comments, any feedback, right? Any constructive criticism, I'm always listening. You know, I've been doing this newsletter for almost 10 years here at School of Trade, every evening like clockwork. And the reason why I've lasted so long is because I'm always getting better. And the way I get better is listening to you guys and gals. So how can I make this video better? What do you love? What do you hate? What's the most important thing that I talk about every night on this newsletter? I want to know what you love. I want to know if you were in control over here, if you were planning the newsletter video, what would you do more of? What would you do less of, right? Let me know some feedback on there. What's the most important part of this video to you? Drop those questions, drop those comments, send me that feedback in the comment section below. And one of the things I always want to ask you guys on this video is, in your opinion, what's the biggest obstacle standing between you and becoming consistently profitable? Is it technology? Is it psychology and mindset? Is it strategy? In your opinion, right, what's the most important thing that I can talk about every night on this newsletter? Drop those comments in the comment section below. That way I can keep on making this video better for you guys every evening. And by the way, while you're down there in the comment section, hit that thumbs up button for me, because believe it or not, every time you hit that thumbs up button, YouTube helps to expose this video to other traders who are dying to learn this simple trading strategy. So hit that thumbs up button, help me grow this channel, help other traders find these videos. And as always, right, really appreciate all your helping on our YouTube videos. And don't forget, if you have any questions, don't be afraid to call that toll-free phone number in the upper right-hand corner. I'm always here in the office standing by. Even when I leave the office, the darn thing forwards to my cell phone. So don't be shy, don't be embarrassed, right? Call that toll-free phone number. I'm always here. Maybe you've got questions about getting a free trading classes here at School of Trade, or maybe you want to know how to get access to our trade room on your free pass. Call that toll-free phone number. I'd be more than happy to go over all the different options of getting started, right, as a free member, as a paid member, or any questions you may have along the way. So call the toll-free phone number, hit me up in the comment section below, and as always, thanks for hitting that thumbs up button right while we're doing it this morning here. Let's jump into the video here tonight. First things first, let's grab the economic news calendar here, courtesy of the Econo Day calendar. Today, of course, is Wednesday, or tomorrow is Wednesday, November the 20th. And of course, as we look at tomorrow's news tomorrow is pretty much your typical Wednesday with a little bit of FOMC sprinkled on top. Tomorrow, of course, is a typical Wednesday in the sense that every Wednesday morning we have the petroleum status report at 10:30 Eastern time. So what that tells me is tomorrow morning on oil, the best trades will happen before 10 o'clock Eastern time. Every Wednesday morning, oil traders only for crude oil. We have that news at 10:30. What that tells me as an oil trader is the best trades occur before 10 a.m. Eastern time. Anything after 10 o'clock, and you're really playing with fire. Well, in all reality, it gets very slow. Usually, sometimes there's always an exception to every rule, right? But usually, though, on a Wednesday where there's going to be a report at 10:30 for oil, usually as about 10 o'clock Eastern time, it gets really slow. And so you got to be careful after 10 o'clock. And the news comes out at 10:30, so I like to wait until about 10:40, right, once that news comes out, and then we'll get back on the horse and start riding. So, of course, 10 o'clock Eastern time tomorrow is a big milestone for me, right? I would encourage you, be careful on oil trading after 10 o'clock. Wait for that news to come out. See how the reaction is. We do not want to trade news. News is not reliable. One of the easiest ways to blow your trade account is to get caught on the wrong side of that weekly inventory report. I would not recommend messing with it. I would protect your capital either before 10 o'clock or after 10:40 if you're an oil trader. And of course, tomorrow morning, we'll do all of this together, right? I'll make sure to hold you accountable with all of our clients tomorrow in our trade room. Then tomorrow afternoon, the FOMC meeting minutes. Now, these are the notes from the last FOMC announcement, which of course was 2 weeks ago. Now, as I mentioned before, I don't think anybody really expects the Fed to be cutting rates or raising rates anytime soon. They pretty much, during Powell's testimony last week, he pretty much confirmed that they were done cutting rates here at least through the end of this year. So I don't think anybody's going to be really waiting to see what's in those FOMC meeting minutes, but you know what? You never know. So even though tomorrow I don't expect to see a lot of response to the FOMC minutes, like I always say, there's always an exception to every rule. So if you're in the afternoon, right, if you're trading this out tomorrow afternoon, be aware, 2 o'clock, big news comes out. I don't expect much, but hopefully I'm wrong. Hopefully there is something surprising in that news announcement at 2 o'clock and the markets respond to it. But I wouldn't hold your breath for that news tomorrow afternoon. I don't think anybody really believes the Fed is going to change rates here before 2020. So big news tomorrow at 10:30 Eastern time, FOMC meeting minutes in the afternoon. The big news, I think, tomorrow is that weekly inventory report at 10:30 Eastern time. Now, don't forget, we're going to be in our trade room like we are every morning at 8 o'clock Eastern time, and hopefully I'll see you there, right there with me. Speaking of which, let's grab some charts and let's get ready for tomorrow's trading strategy. What do we got here? We got some crude, some S&P, some Nasdaq, and some gold. What do we know about the oil? We know the oil market, of course, is a strong bear market down. And the bottom line is we know we're bearish right now. I know I want to be a seller at resistance. So what I've done is I've gone out and found some levels of resistance. I've started off by drawing my trend lines off the low, bringing that up around the high. That'll be a key level of resistance to keep an eye out for tomorrow. I'm also watching that low from there we go all the way back there at 55.88. That is a great area to keep your eyes on here for tomorrow as well, because you can see where that lines up right around the top of that channel. That will be a good spot to keep your eyes on tomorrow. And then at first glance right now, it looks like we have a range forming. At the very least, it's double bottoms. Right, at this point, it does look like a range. Anytime I have a range on the chart, I can take the size of that range, and the size of that range helps me find my key levels of resistance. The size of that range helps me find those key levels of support. So obviously, I want to pay attention to the levels of resistance overhead, and it all lines up right in that same area, 56 down to 55.80 for tomorrow morning. So we know we're bearish. We know we want to be a seller in a bear market. It's a pretty simple and straightforward plan right now. I don't want to trade. I don't want to sell low. That's for sure, because we can easily see this market's been tumbling all day long. At this point, this is the last place I want to be selling right now. I want to sell at a much higher price. More importantly, I'd love to catch some buyers who are trying to call a bottom on this. I'd love to catch them on the wrong side of the market. So now you know what my resistance levels look like. What I'd like to see is some of these sellers take some profit. Get this market to get up off of this low. And when it does, I'm hoping that buyers are going to anticipate this as a reversal and try to buy that pullback. And as we saw a couple times today, right, every time the market got back above that moving average, the bears were waiting to slam it right back down again. And that's what I'm hoping we get more of tomorrow. I'm hoping that once those buyers come in and try to buy that pullback, I can now wait for their failure and literally sell right into those stop losses, going back down into that trading range. So again, hopefully these bears will take some profit. The price will jump up. We'll then be able to catch those buyers trying to call that reversal, right? Let them try to buy off that moving average, and I can sell it going back down in, right? Now, sometimes we get lucky and we get a combination pattern, a failure, right? Then into a pullback and a run back down from there. Sometimes we get this beautiful combination. The price will pull back off the low, the moving average comes over, the buyers try to buy it. That tells me exactly where their stops are. The market's not bullish, it's bearish, so the odds are not very good for the buyers right now. I'll slip my order in right underneath that low, sell into those stop losses, and again, sometimes we get lucky and the market will come back and let you add to your position, right? Or double down, right? Or if you get your first target, get back in on a pullback. I call that a failure into pullback combination. Now you might be wondering, well, what would a reversal look like? Right? If a strong move higher isn't a reversal, what does a reversal look like? A reversal would be a strong move up, a pullback to the moving average, and the buyers simply have to hold the pullback and give me a nice jump off the moving average. I call that a 1, 2, 3 reversal pattern. It's a very, very simple pattern, and it really is the only reliable way to confirm a reversal. You can try to pick a bottom all you want, but until you see those buyers jump off the moving average, right, that's when you know it's really a trend reversal. The best part about this is once you see that 1, 2, 3 reversal, which honestly I hope we get tomorrow, right? I don't care what direction I trade in. I just want to make sure I have a good risk reward. If this thing runs higher here, I can now grab a trend line off that high, bring it down off that low, find this hidden channel, and then just wait for the pullback, right, down to that hidden channel. That will be a fantastic pattern here for tomorrow. I hope we get it, right? It'll be a nice, easy runner back up to retest today's highs and possibly even more. Again, usually, like I mentioned in the beginning introduction today, usually when OPEC talks, right, or a member of OPEC talks, usually that kind of, it kind of gets everything all moving for a couple days, and then eventually we usually end up right back to where we were. So I wouldn't be surprised if by the end of the day tomorrow, if not tomorrow, I mean, we got news tomorrow morning, I wouldn't be surprised here if we end up back there within 48 hours, right? Between end of day tomorrow and end of day on Thursday. We're not there yet. I'm not telling you go buy the bottom on this right now, but if we do see that 1, 2, 3 and jump off that moving average, yeah, now the bottom is in. Now we can find that new channel, and now I can be a buyer right off the low of that channel. Now, is that the only way to be a buyer on this? It's not the only way to be a buyer on this. Another way you can buy this too is if the market goes sideways here for a while, then we know that balance area. If I can get a run going lower, I might be able to get a pendulum swing back up in the opposite direction. So imagine for a moment here now, the market goes sideways on us, right? We keep going sideways here overnight, right? Whatever the case may be. Market's completely balanced. At this point, the sellers are absorbing any and that pops up. Nobody's taking profit, but nobody's selling it right as it goes lower. What I look for is I'll look for that strong run down into that next buy zone down here. Now, how do we buy off the low? How do we buy underneath a trading range? Well, again, it's a bear market. We got to be careful being a buyer in a bear market. What I'll look for is I'll look for that crown reversal pattern that we talked about in last night's newsletter. We want to see the bears try once, higher high, try twice, and a trap low below that, right below that low. This is the key to picking the bottom in really any market. But the one thing is, if we can get a range going here, that will slow down this momentum a bit, and then that will give us a chance to be a buyer underneath that trading range. So other than that, right, it's pretty simple so far, right? I want to go up. I want to get that failure into that pullback pattern, back down into that trading range. If they go up and hold the pullback and run, again, 1, 2, 3 reversal, I'll mark up that high, mark up that low, buy the low of that channel. If we go sideways here, then I can go 1 big move down, 1 try for the bears, 2 try for the bears, right? Wait for that strong move down. The bears will try to keep it going. Let them try a couple times here, right? Twice to be specific. Look for that trap low, and we're buying back up into that range. The pendulum swing again will make for an easy target. So first target, of course, is back to the other side of the range. The second target, right, is on the pendulum swing. The amount of the move below the range is the amount of the move above the range. Now, we don't know where that range is yet. I've made a pretty educated guess right now, but this range could be a little bit narrower. It could be a bit wider. So we'll have to play that by ear here for tomorrow. Now, what if we keep going lower? Right? What if we don't? What if this thing keeps going lower here? If it keeps grinding lower, we'll call this a spike in channel. I'm going to leave this hidden channel here, and I'm literally looking for the same thing. I want to see us go up, get the moving average coming over, get those buyers to try to buy the pullback, and same idea, right? Sell into that failure. It's one of the easiest patterns you'll get a chance to use. So again, if this thing keeps going lower, right? If we keep running lower here in the overnight, I'll call this a spike in channel. And I'm going to wait here for a pullback. Again, I'll leave that channel up there. I'll wait for some profit taking, get up, get that moving average coming over. Let those buyers, again, let them try to pick that bottom. They might be right, but they're probably going to be wrong. And if they're wrong, right, the odds say they're going to be wrong more than to be right. I want to sell right into those stop losses. Right? Hopefully that makes sense. If it doesn't make sense, drop me a comment in the comment section below, right? Let me know that this is not making sense for you, and I'll make sure to kind of address that more in my next video. If this does make sense, right? If you love this pattern as much as I do, if you find it easy to find these failures, hit that thumbs up button and type the word easy into the comment section for me. I want to know whether you find these to be hard, right, or easy. If you find them easy, hit the thumbs up. And then type in easy in the comment section. If you find these challenging to find, I got to do a better job teaching them, right? Let me know in the comment section as well. That will give me an idea of what I can do to keep improving on this video to make your trading easier every day. So now we're looking good there on the oil. And by the way, as we go lower, that next big milestone for oil is all the way down at that 53.84, right? All the way down there. We got a long distance to go here for those bears. Again, what typically happens is the buyers will take this back where it came from, but we're definitely not there yet. We've got to wait for more evidence before we go trying to be a buyer on this. In the meantime, we're selling off the high, right? Catching those buyers on the wrong side. Now, we talked about failure patterns, right? We talked about crown reversal patterns. I want to give you even more great details on those patterns. And to do that, I'll give you a free trading course in the upper right-hand corner. So do me a favor, pause the video, grab that free course. It's linked up in the upper right-hand corner if you're on YouTube. If you're on the blog right now, it's Sideways Markets. I'll put a big red button for you right below the video tonight on the trading blog. But grab that free course. It's linked up in the upper right-hand corner. You'll learn all my favorite patterns, my 3-step trading strategy, and most importantly, you'll see hundreds of examples of how we apply patterns of those failure patterns and our crown reversal patterns to our favorite futures markets. So again, grab that free class. It's linked up in the upper right-hand corner. Feel free to pause the video. I'll be here when you get back, right? Great free class. I really like making it. I know you guys like it as well. So check that out here when you get a free second. How about some S&P here right now? Over on the S&P. S&P's pretty simple and straightforward. It's a bull market into a trading range. And again, as I mentioned in the introduction, we keep seeing the buyers come in and defend these pullbacks. So we have a reason to believe the buyers will continue here, unless of course something goes wrong and we could see a big tumble back down to that 30.80 area all the way back we came from at the beginning of this month. The bottom line right now is we know we're bullish. I think the big elephant in the room right now, though, is that strong move down off the high. Usually those strong moves down, they're going to give you another leg on this. And so I have to assume there might be a very deep pullback, right, in our future here on the S&P. So I know we're bullish. I want to buy at support levels. Where could I find some levels of support? Well, I can easily see that prior swing, this prior swing. That's all pretty easy, right? So I'm going to mark up that prior swing. The key to a triangle is really focusing on the swings. Right? I'll mark these swings up right now. The key to a triangle is focusing on those swings, right? Now, of course, it's a bull market. I want to buy and I want to sell, right? Buy low, sell high. I'd rather be a buyer. So I got a little support level there, right? 31.12, 31.11. But then look here too. If I draw a trend line underneath here, I'm starting to look at this more like an expanding triangle. Expanding triangles, the year of 2019 has been the year of expanding triangles. It really has. There's been a lot of these, especially at these all-time highs here right now. So I really like that trend line. Now that trend line will produce a much bigger pullback. And so because that pullback will be so large, because momentum will start to pick up for the bears, we'll want to use a slightly different pattern. And of course, as I go higher, I can sell off that high, but because I'll be going against the trend, I've really got to be careful, right? Going against the trend like that. So let's break this thing down here now. We know we've got that strong move down. We know where the measured move is. Right, that creates that buy zone underneath. I'm going to clean this up a little bit. We know the triangle, right? With the triangle, we want to stay away from that middle, right? Stay away from that middle. Stay out of the middle of that, right, of that triangle. And then also don't forget too that once the triangle starts to get to the narrowest point, we oftentimes see a big breakout, either up or down. But guess what? That breakout almost always comes right back to that triangle again. Goes up and comes right back into that triangle again. So we want to stay out of the middle. We don't want to trade in the middle here in the 31, 17 area here. We want to buy low. We want to sell high. A lot of this is similar to crude oil, but the opposite direction. Right? I've got my levels of support here at 31.12, 31.11. I'd like to see us get down underneath, right? That triangle, get that moving average coming over, get those sellers trying to sell off of it, right? And then use that 2-try rule, as I mentioned in last night's newsletter, that 1 try, that 2 try to buy it right back up. You'll see examples of this quite a bit, right, in these range-bound markets, right? We go lower, let the bears try once, let the bears try twice, right? And again, that free class that I mentioned earlier, we'll talk a lot about this particular pattern because it's very, very common in these range-bound type of, all-time highs. They oftentimes produce big ranges up here. Now, that's the easy one, right? We go 1, we go 2, and we go up. But what if we really tumble? Right? We got that measured move. What if we really, really tumble and make a run going lower? At that point now that momentum is just simply too strong to want to buy. So in this case, we're not a bear market yet. We're still overall bullish. So in this case, I'll look for what I call a nested variation of that failure. Instead of looking for a straight failure back up into the range, what I'll look for is the bears to try once, higher high, try twice, and back up from there. Almost all the time, you can take those 2 highs, bring it down to that low, kind of find that little hidden channel there, right? And again, it's just another variation of that 2-try rule that we talked about in last night's newsletter. But in this case, obviously, because that move is so strong going lower, we want to let those bears try once, try twice, because a lot of times what happens is you get those strong moves lower, right? The bears will try once, they'll try twice, and they'll actually get that second leg, right? That second leg will finish the job off. So you don't want to just buy it blindly. You want to make sure as we go here, right? If we do make that run lower here, right? And again, big move down, 1 try for the bears, 2 try for the bears. And again, what you like to do is mark up those highs down to that low, right? And pick that bottom right off of that low, back up into that trading range. So now we kind of know what the plan is. Now again, stay out of the middle, right? Stay out of the middle. So if we keep going sideways here, right? Move down, 1, 2. I want to point something out here that as we get closer, as this trend line, let me zoom a little bit closer here, right? If I can get something quickly here, I can do this pretty easily. But if I get that same pattern late in the morning tomorrow, now that trade will not be as desirable. Okay, so please make sure you see the difference here between this trade, between that pattern, and the one later on. Okay, what's the difference? The difference is reward, right? There's very little reward later on in that move. So make sure you avoid trades as we get closer to that triangle completion, right? So again, let's say, for example, we go sideways here for a while, get that big run down, perfect, right? 1, 2, back up in. But if I wait, tomorrow, if I wait tomorrow until right here, 1, 2, yeah, see, that's not going to be very desirable, right? I'll probably skip that one, wait for that run, and then look to buy it at a much lower price using the same basic entry setups, right? Failures or nested failures, depending on how far this market pulls back. So just be aware of that. That there is a triangle here, so that that trend line coming down definitely means that these two patterns are not created equal, right? Hopefully you can see that, right? These two patterns are simply not created equal. They're not as reliable. The later it gets, right? The later it gets, the less reliable it will be. You just want to make sure you stay away from that middle. That's all, right? Stay away from that middle. So want to buy low, want to sell high. How do we sell high on this one? Now, selling high, it's a bull market. So as we go higher, and again, make sure on a triangle, watch those swings. Okay, resistance overhead. I'm also drawing a trend line across these highs. This would be where I would expect you're going to get your best results tomorrow, is off that trend line for tomorrow. I've taken this trend line here. I brought it back up there. That creates kind of like that little hidden channel up there. That is definitely where I'm anticipating I'm going to get my short for tomorrow. The problem is, though, because we're so bullish, I've got to use that nested pattern. 1, 2, and then back down from there, right? You can't just sell in a bull market. I don't care how much resistance you've got here overhead. We got plenty, right? I got resistance there at 25.25. I've got trend lines there overhead, right? It's easy to see, right? That, of course, is a great area to be a seller. But if we get that strong move up, though, I just simply don't want to go against that trend. I want to be a seller, right, as we go off of that, right, off that high with a nested failure pattern. All right, guys? And then as we go higher here, right, could we break out? What a breakout look like? Breakout pattern. How about a downside breakout? Breakout pattern. 1, 2, 3, break down. Mark that low. Mark that high. We're selling off of that high. One of the nice things about a 1, 2, 3 breakout pattern, like we talked about on the oil earlier, if we do get that strong move down, they hold that pullback, right, and they can run it off that low. Now we know the odds are pretty good you're going to get at least a quick profit target off the high of that channel. So don't be so worried about selling low on it, right? The more important thing is, if this thing goes lower here, right? If we go lower here, keep going lower, moving average comes over, the bears come in and they clobber it off that low. Yeah, now that new hidden channel there is definitely going to be on our radar and looking to sell off the top of that hidden channel. Now, it doesn't look like it right now, right? Certainly does not look like it's going to happen right now. But what if this thing does turn around and run higher here? What does a bull breakout look like? Same thing, right? So we go back into the range. 1, 2, 3, bull breakout. Mark the high, mark the low, right? And we're buying off the low of that hidden channel. Now, this will be at all-time highs, but again, but typically speaking, though, when you get a 1, 2, 3 break out of a range, 1, 2, and 3, typically when you see a 1, 2, 3 breakout, that momentum and the fear of missing out is just so strong that you'll usually get right, that next leg as we go higher. So as we pull back here right now on the S&P, you can see they're opening up in Asia right now, right? We have that market now going lower. Do I get a shallow, right? Do we get that shallow 1, 2 and back up? Or does it really pile lower here? Again, I'm anticipating that measured move here for tomorrow. I'm anticipating a pretty strong run lower here and anticipating I'm going to have to use that nested failure to be buying back up, or I'll look for the 1, 2, 3 reversal, mark up that low, mark up that high, and we'll sell the top of that channel, taking it lower here for tomorrow. So that's we know right now. We know we're bullish. We know we're in a range. We want to buy off of that low. I definitely can sell off the high, but again, I've got to be careful because of what? because of momentum. Momentum is the big killer. S&P is looking great here tonight. How about the Nasdaq? Nasdaq's in a very similar situation, right? We know we're overall bullish. There's definitely no question about that. We can easily see the market has been quite bullish over the past couple days, but now we're not seeing those higher highs anymore, right? Now we're seeing lower highs. We're seeing higher lows. Moving average starting to flatten out here. This looks like a range-bound market to me. And of course, there is a bull bias to it, right? There is a bull bias to it. So I do want to be a buyer off the low here, right? So what I'll do is I'll zoom in on this, get a little bit closer on this right now. And again, even though we are bullish here in the long term, you can see that strong move down, right? That strong move down. There's my measured move. So this area down there is really what I'm anticipating is going to be the most important level down there. Again, as I mentioned in last night's video, the buyers are more than clear on their intentions. They keep buying this thing back up. They keep defending this area. They're definitely not interested in buying high right now. You know, we keep seeing these shots in Asia, right? But they keep coming right back down again, and the buyers keep coming in, right? And kind of plunge protection, if you will, right? Buying it as it goes lower. Now, again, when it comes to a triangle like this, the swings are the most important levels, right? The swings above, the swings below, those are always going to be the most important levels to keep your eyes on. If we can get this thing to make that run all the way down into that, right, into that battle zone down there, that will be quite bearish. And so because of that, I want to see that nested failure 1 and 2, and then back up, right, into that trading range, right, back up to that 83.44 area. At the same time, if they get stuck back inside this range here, I can go up and I can use that crown reversal pattern, right, that 1, that 2, and I can sell off that high. Remember that one from earlier, right, that crown reversal? So again, I can buy off the low, I can sell off the high. I've got to be a lot more conservative when I try to sell off the high because, again, it's a bull market. So as I pull back right now, and again, I've got that trend line, same idea here as the S&P, right? I love these kind of inverted triangles, if you will, and I like this area down here, right? Like the area, it's right around that swing, it's right around that measured move support level. So we know the area is there, and really at this point now, if we're going to get all the way down into that area here, that will be a pretty strong move down. And so because of that strength, I'm going to want to see those bears try once, try twice, and then I can look for that rally now going back up into that range. I don't necessarily need a crown reversal on that pattern because, again, we're going with the overall trend, right? When I do need that crown reversal is when I try to sell off the high, right? Trying to be a seller off the high, I want those buyers to try once, lower low, try twice. And this is where you do want to get that trap. This would be your typical crown reversal pattern, right? And again, we're selling off that, right, off that high, going back down into that trading range. So it's going to be a nested failure pattern to buy down in that buy zone just because of the size, right, of that pullback that's required. And then again, we want to be a seller off of that high. What would a breakout look like? Breakouts are pretty easy in this one, right? Strong move down. Now remember, a strong move down is not a guaranteed breakout. A lot of times they'll pull right back to that moving average and they'll fail and go back in. Look at this one back here. Right? They pull back, they fail and go right back up right into that trading range. We don't want to make that mistake here by trying to call that, right, that breakout. Wait for that strong move down, wait for that run through, find that new channel, mark up that high, and then we can go being a seller off of that high from there. It makes a lot more sense to wait for the breakout because most breakouts in liquid markets like the ones we're covering tonight, most breakouts are going to fail. There will always be an exception to every rule, you know, as I always say in my trade room, even a broken clock is right twice a day, but we don't know when it will be right. We don't know when that breakout will work. And so we default to fading those breakouts in range-bound markets. So now the plan's pretty easy, right? Plan's pretty easy. Get that pullback, that nested off the low. We go up. It's the crown reversal off the high. We stay out of that middle. And again, that middle, don't forget, we oftentimes see those big shots once that triangle gets too tight. We oftentimes see that big shot going lower. Don't chase it. Fade it. 1, 2, and right back up we go. Or if we do get that big shot, wait for that pullback. Wait to see if these bears can hold that pullback right off the moving average. 1, 2, 3 breakout. 1, 2, 3 breakout. Once we get the breakout, mark up that low, mark up that high. Now we know. Yeah, now we know. Now we know where we want to be. Wait for the 1, 2, 3 breakout and sell that breakout pullback, or sell the pullback to that hidden channel. It's a 1, 2, 3 breakout, right, with a hidden channel pullback. And again, all these patterns, by the way, all these patterns, I cover all of them, right, in that free course that I mentioned earlier. So definitely grab that free course in the upper right-hand corner. And again, same thing earlier, right? Same before, right? We go up 1, 2, 3, strong move, 1, 2, 3 breakout into that hidden channel. Where's our target? Target's up to that next measured move up top. This is that same measured move we talked about in last night's newsletter, right? Measured move there around 8,400. Can't believe it. 8,400. That is that, right? That is that measured move that we talked about in last night's newsletter, right? The 1 and the 2 going up from there. So that's going to be our next level weighting overhead around that big round number at 8,400. If the bears can take this, we've got all that range down here, right? Back around that 8,250 area, if those bears can take it. So we'll wait and see if the bears can hold it or not. You know, as of right now, it looks pretty bearish right now, but it's overnight, and we'll see how this thing, right, wants to go. The last time we saw the market open up with a big red candle, it ran right back up in our faces there. So definitely don't be so aggressive at selling this market yet. We're bullish, the low of the range, buy low, sell high, avoid that middle, and again, don't be so aggressive on trading those breakouts. Let's talk about gold here for tomorrow. Last but not least here, over on the yellow metal. Like I mentioned in the introduction, gold, of course, had that big run up. Anytime we see a big move in one direction, we almost always will get a second leg, right? The problem is that second leg appears to be running into some major headwinds right now. Now, it looks like they're trying to go through these highs right now, but we'll see if they can get there. There are really 3 scenarios that you want to be ready here for tomorrow. 1 is a breakout higher, 2 is a range, right? And 3 would be a collapse back down, right? Those are the 3 basic scenarios: up, down, and sideways. I know, pretty clever, isn't it, right? Never seen before, right? Up, down, and sideways. Anyways, so all kidding aside, it's a range, right? This looks like a range-bound market to me. I take that trading range. I want to buy low underneath. I want to sell high, right, overhead, and I want to avoid that middle. I also use that range to find my buy zones underneath, right, to find my sell zones up overhead. So now we know kind of how that range plays in. I also have that strong run higher, and that strong run higher gives me that measured move target up around that 1484.3. So that's going to be the big milestone for those bulls. If the bulls can get this, they want to go back to that, up to the measured move. If the bears can get this, they want to go back down to retest that low, at the 1456.6. Okay, so let's talk about the bull side here right now. Being a buyer, I don't want to trade the middle. Being a buyer, as we go higher here, there are 2 patterns to look for as we go higher. One of them is the typical, right, 1, 2, 3 breakout. Now again, we're obviously struggling to get through those highs right now. So even if we do pop higher, this could easily come right back down in. So don't be too aggressive as we go higher here. I want to see a pop up. I want to see a moving average coming over. I'd like to get that moving average up above that high and then hold that pullback. It's not required, I'll be honest. If it pulls back and runs from there, I'm okay there too, right? But I'd really like to see it come up, right? Up, hold that pullback, and go. That would really confirm that buyers are really, really hungry on that move. But again, all we really need here right now, the bare minimum is now going to be that strong run up, a breakout higher, a moving average comes up, the buyers come in, they hold that pullback, and they run. At this point now, I'm going to mark up that high, mark up that low, find that hidden channel, and wait to be a buyer underneath that hidden channel or at the low of that hidden channel. Again, we call this a 1, 2, 3 breakout, as in 1, 2, 3. The actual breakout requires a 1, 2, 3. 1, 2, 3 breakout into a hidden channel pullback. This is the best pattern, the most reliable pattern for trading breakouts, reversals, really anytime you're unsure about the next move. You want to wait for that 1, 2, 3. That confirms the breakout, and then wait for the pullback. Now, we might see this market really just keep pushing higher. So if we do see it really jump, right? Let's say the short-term price jumps. If it jumps like this, we know where the market wants to go. Now all we need is to find a way in, buying as low as possible. So as the market jumps higher here, what I want to do is wait for profit taking, wait for sellers to come in, try to sell it, and then buy underneath that low. Okay, this is called a 2-try breakout pattern, or as I call it, the FOMO breakout. Right? This is the FOMO breakout. What I mean by that is you want to first start off with a big spike higher. That spike higher is what leads to the fear of missing out. Okay, that's why I call it a FOMO breakout. Okay, the official name for it though is a 2-try breakout, because what happens is it's a breakout, but the buyers will take profit first. The sellers will come in now, right? It's the sellers now getting in, and now we've got them right where we want them. The challenge in this situation, though, is the measured move. That measured move is right overhead. So I don't want to be too aggressive. I want to be somewhat aggressive, but not too aggressive here. I want to buy underneath that low. Now, if there was no measured move up there, right? If there was no concern about that overhead resistance, okay, that target, then what I could do is just go up 1, 2, and buy it after 2 tries there. Okay, you see example in the gold back here from earlier, right? Strong move up, 1, 2, and you're buying from there. Makes sense, right? That pattern right there, again, we had no worries about space. So again, if we didn't have the concern about space, we wouldn't need that trap. Does that make sense? Remember, you always want to know, where are we trying to go? You know, one of the things I try to repeat over and over again in my trade room is know your exit, so you know where to plan your entry. And what I mean by that is that by knowing your exit, you know where the target is. If you know your target, you can make sure you're getting a good risk-reward ratio. Remember, risk-reward ratio is not about stops and targets. Risk-reward ratio is about mindset. Make sense? Right? If I go up, if I see a market run up and the moving average comes over, right, and buyers now come in to buy that pullback, what's the risk-reward ratio look like on that? It's not very good. There's not a lot of profit baked in. So how do I increase the odds of my success? I get a better risk-reward. So what I'll do is I'll look for a trap, and if I get a trap, now I get a lot more profit potential in the trade. Okay, so when we go up, right, we go higher here, there's no question about the strength of it. I want to be a buyer. The question is do I have a good risk-reward ratio up there to give me the odds of success that I want on that trade? Because if I can't get a good reward, no matter what the risk I have to take, if I can't get a good reward, I can assume that not a lot of other traders are going to be able to get a good reward either. And professional traders, they're not going to risk their capital. They're not going to risk their hard-earned capital on trades that simply don't give them a good reward. Okay, again, it's not about, risk 10 to make 20. It's about the mindset of the other traders in the market. Hopefully that makes sense. So again, in some situations, you'll go up and you'll have resistance overhead and you'll want to get that trap low, right? Buyers take profit, bears come in, and looking for that trap low because, again, right, you want that trap underneath that low because you get that overhead resistance. If you don't have that, all you need to do then is get that simple 2-try, right? 1 and 2. All right, really good stuff there on the gold. So now we know what the market looks like is go higher, right? The 1, 2, 3 breakout into hidden channel pullback, or the 2 try breakout pattern. And again, all of these are covered in that free trading class. Now, the other challenge we have is we go back into the range, right? If we go back into that range, if we go back into the range, it's a range bound market. And what does a range tell me? Buy low, sell high. But what's the most reliable pattern? What's the most reliable pattern in a range environment? A 2 try pattern. So if we're going sideways here for a bit, stuck in the mud around that range, just wait for it to go lower. Wait for the pullback to the moving average. Wait for those bears to sell off the moving average, right? And then literally buy right into those stops. Okay, now again, as I mentioned in last night's video, these failure patterns oftentimes take longer than you might think they will. You want to see 2 obvious tries, right, as we go lower. So strong move down, there's 1. Make sure you see a clear second try off the moving average. Now you know where those stops are, and then we can buy into those stops. But what if we don't get a little shallow pullback? What if it really runs right down into that second deviation? Yeah, now that momentum is pretty strong, right? We don't want to go, I don't want to buy into that because we might get a 1, 2, 3 breakout and the market may keep going. Okay, so if we get a real strong pullback like that, now we look for what's called the nested failure. We let them try once, we let them try twice. And again, you want to see 2 clear attempts for the bears, 1 and 2. Again, I always like to go out, draw that trend line, find that low, you know what I mean? And try to use that trend line. It won't always be that easy, but that's kind of the ideal, right? The ideal is you've got that kind of that little hidden channel there and you're buying off that low. May not, right? Sometimes what happens is sometimes the market, right, will pull back like that. And they'll do this, right? They'll go 1 and 2 like that, and you simply won't be able to get it, right? So once we run lower, again, real deep pullback in that example, bears try once, higher high, bears try twice. I look to draw that trend line up off that low. Then that's when you know you've got those bears right where you want them, right? Again, I want to buy underneath a range. We're overall bullish, but it all depends on the size of that pullback. A real deep pullback tells me momentum is too strong for the bears, right? Strong move down, way too strong just to buy into it. Wait for them to try a couple times, and then we'll buy up from there. Now, that also leads me to believe, right, or leads me to talk about what does a breakout look like, right? Now, we know what a bull breakout looks like, right? Bear breakout, pretty much same thing, right? Strong move down, moving average comes over, they hold the pullback and they run. If they can hold that pullback and run, you can almost always draw the trend line off that low, up around that high, find that hidden channel, and sell off the top of that hidden channel. It's a very reliable pattern because you got everyone chasing after it, right? The FOMO is kicking in. It's very momentumous, right? The momentum is going strong to the downside. It's a great setup pattern, right? No matter which direction the trend is. Looking good here. So now we know the plan here for the gold. Want to buy low. I want to sell high. I'm also watching here for a full-blown reversal. Okay, looking good. We know the targets are above. Targets are good down below. We're going to go there on the gold. So gold looking good. Nasdaq and the S&P. It looks like the S&P's puking up, right? Puking its guts up right now. We'll look for that failure going back up into that range. And it looks like oil here. Got to wait patiently on oil. Will we get that short covering rally for tomorrow? Will we be going back to 57 tomorrow morning? Only time will tell. But you know what I know for sure? I know tomorrow morning, like every morning, Monday through Friday, we're going to get together and we're going to trade this stuff together. Because one thing is for sure, learning this strategy is the easy part. What's not so easy is applying it to a moving market. When you don't know what's coming next, and especially if you're a brand new trader, there's a lot of moving pieces to put together. So as I mentioned earlier, we trade this stuff together every morning in our trade room. As advanced members, you'll have all access to our video classes, all the tools, all the trading sessions, all the ongoing support, right? You'll have me whenever you need me to answer questions on charts throughout the day. I always love working with my clients, and you can get registered by going right to the website at schooloftrade.com. If you're on YouTube right now, I'll put all the links in the description of that YouTube video. If you're on the blog at Sideways Markets, there's a big blue button right below me tonight to get yourself registered for tomorrow morning's trading session. And as always, don't forget, don't be a stranger to always pick up the phone, call that toll-free phone number, use that live support tool in the lower right-hand corner. I'm always here to help answer your questions, so don't be a stranger. And as always, guys, if membership is not quite right for you today, not to worry. That free pass, that free course is all included with our free trial. Grab the free trial, enjoy the free trading course. That way you'll get a good foundation to trade with us, or to at least follow along with me every evening on this newsletter, and you'll see hundreds of examples of how we apply this strategy to our favorite futures markets. So don't delay, get registered for tomorrow morning, or grab that free trial, and I'll see you on your free pass right into our trade room. As always, guys, great job today. Tomorrow's another big opportunity. I look forward to seeing you guys tomorrow morning in the trade room. If not, come back and see us again tomorrow night in the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.